We're rolling. Welcome to the House Dudes podcast, where we invite you to follow us on our journey towards financial freedom using the power of real estate. I'm Jack Haas.
And I'm Josh Koth. Here at House Dudes, we believe in a couple key principles. Number one, the best way to retain information is by teaching it to others. And number two, a rising tide lifts all boats. We're not competitors, we're a community. So let's get into some real estate investing.
Well, we have Aaron Fragnito on the line. And Aaron, I warned you, I'm going to throw it right over to you right off the bat. So why don't you introduce yourself? And I really appreciate you joining us this week.
Absolutely, Jack. Thanks for having me here. Yeah, no problem. I love talking about my business. So we buy an apartment building every 3 to 4 months here in New Jersey. My job is to raise capital and work with high net worth individuals and all types of individuals, anyone with even lower amounts of investment as well. And we also have a residential division, and we fix and flip properties. We wholesale properties. So we're pretty active here. We only invest in North Jersey, though.
Yeah. So that's first question right off the bat is because, a lot of people, especially on the East and the West coasts, struggle with making those numbers work. So tell us a little bit about that process and how you've found your niche there.
Sure. Well, it really helps know this market like the back of your hand. We've Seth Martinez, my business partner, and I have been buying and selling real estate here and analyzing buildings for almost 10 years. And it is a hard market. The hardest part of our job is finding a good deal. We'll look at for 300 or 400 apartment buildings to buy one. So most of it's overpriced. The taxes are high. But rents are high as well. Rental demand is through the roof, resale demand, lending demand, right? So people do want to get invested into this market, but finding a good deal is super hard. The market's very saturated. People will say, I got your letter and 10 others, and you're just the first one I happen to call, so we're up against a lot of tough things. Normal things like internet advertising does not work in these hyper-competitive markets to find good deals. You've really got to have your ear to the ground. And then just knowing how to work with the rent control and the local ordinances. The laws change for rent control one town over. So it's really crazy how much that can completely change your value-add strategy and your long-term plans for a property.
Sure. So, you just said something that I think is really interesting. And one of our mantras is that persistent, consistent behavior. And it was really interesting that you say, and it's a great reminder that you review like 100 properties to find that one. It's not that low-hanging fruit that a lot of people think it is.
No, it's not low-hanging at all. In fact, there were low-hanging deals. I've probably done 300 transactions in my lifetime. So there were those few stories that are super cool and we did really well on. But for the most part, right now especially, I will spend $15,000 on direct mail marketing to find one cheap apartment building in North Jersey, sometimes more. And that means answering a lot of leads, looking through a lot of junk to find the good stuff. So I understand why people go to Kentucky or North Carolina or Buffalo or Texas to find a good deal. I get that. But I've also hired outside management companies hours away, and they ended up stealing money from me. I had to take them to court. So after that experience, we manage everything in-house and we control our assets and we buy close to home here.
Right. So you said that you spend $15,000 probably to find that one apartment building. Is that typically your average? And have you found that direct mail is your best approach?
Yes, direct mail is probably our best source of discounted apartment buildings. Residential is a little different, but as far as the commercial apartment buildings go, direct mail is great, but also just our network of realtors and brokers and wholesalers that we work with here. They know we're good buyers. They know we close quickly. We have the capital. We're people's capital group. So ideally, we should have the capital to close very quickly on your real estate. So, wholesalers and brokers call us up first. One of the best deals I just bought this June was a 14 unit in Berkeley Heights down the street here. And we got it for a fraction of a price. And the broker actually owned the real estate. And he called us up. He said, I know you guys. I like you guys. We actually called him asking, if you have any pocket listings. He said, well, I'm about to list my own building. And he said, before you list it, let us run down there and make you an offer. We did. And we got the property for about $250,000 below market value.
Well, that's awesome. It is really amazing how letting everybody know what you do really generates those opportunities. Some of the best ones we've experienced have all been referral based or just happenstance, just mentioning it to people or following up with your team or your network, right?
Mm-hmm.
So
Mm-hmm.
let's talk about your fix and flip side of things. Like, how do you typically find those properties?
Well, the fix and flip is a number of different objectives we have there. So we'll do direct mail marketing. We'll do 4 different sheriff sale auctions every week. So my partner, Seth Martinez, he's more in charge of operations. He'll go to 4 different counties in a week, and we'll cycle about $1 million in a given time through these sheriff sale auctions to put down as deposits. And we'll get the property under contract, and we'll assign the bid to another investor. So we don't even close on the real estate. We just wholesale the real estate. We get it under contract at sheriff sale auction. We put up our 20%. We call up our list of buyers. We email it out. We have a great list of buyers here in Jersey. We've been doing it a number of years.
Mm-hmm.
And we just flip the contract. We assign the contract to that buyer. That's called a wholesale, right? So we've done many of that. Did about 60 wholesales last year. I'd say about 2/3 were auction properties. But that gold mine has been drying up, and like anything in real estate, it's cyclical. So,
Right.
here we are this year, putting the same amount of resources towards it, but we'll probably do like half of what we did last year wholesaling.
Sure. So what are you doing to make up for that? You said it's a gold mine. You got to shift your focus, right?
Yeah, and we've read the writing on the wall for some time now with wholesaling, fix and flips. We did very well through, 2014 to 2018 was kind of a good time for that. It's gotten really hard to find a good deal now in the residential market. So we really doubled down on our commercial growth. We find a lot of opportunity here for mismanaged apartment buildings, worn out landlords, the baby boomers that bought properties and they've owned them now for 20 or 30 years and they paid
Mm-hmm.
off the mortgage and they're ready to retire down to Florida. So we do very specific direct mail advertising to those types of individuals. And we are in touch with just dozens and dozens of landlords. And ideally, at some point or another, they agree to sell us the property at a discounted price. And a lot of them also haven't raised the rents in years, haven't figured out different ways to make income on the property. Maybe their expenses are out of control. So we work on all those factors and we get more cash flow out of the building and refinance it over time.
So let's talk a little bit about some of that then. Like you take on these basically distressed or they need some sort of attention. What are some of the more common things or mistakes that you've run into that you can add or change to turn the property around?
Sure. Well, first and foremost, generally landlords might forget to raise rent for about 10 years. And here in North Jersey, rent goes up like minimum 5% a year. So, you got to watch out for rent control and things like that. But we buy in high demand areas where a lot of the changes are happening and improvements in home values. And that allows for rent to go up. So we spruce up these units. We work out cash for keys with some of the tenants. We also improve the building overall, though. You can't just walk into a building and be like, hey, new sheriff in town, rents are going to go double. You have to it's a give and take. So you improve the units, you improve the common area, you remove the drug dealers, you make it a family-friendly place where people are proud to live and feel safe and it's quiet and comfortable and it smells nice. And for that reason, we fix things that break quickly and we treat our tenants with respect and in turn, they'll pay more to live there.
Mm-hmm.
So if you give your tenants a better product and you get more rent out of the building, then that forces the value up on the building. So you create equity by getting your rents higher. And that's something you can control a lot more than the fix and flip business, which is at the mercy of the markets.
Yeah. And the fix and flip thing can get pretty tricky, especially with the market as it is. Being where I'm located too, and I'm guessing New Jersey might have a similar situation. As we're getting into winter, I mean, this is probably the worst time for us to try to sell a fix and flip.
Mm-hmm. Yeah, and I've been stuck with them, over winter. I could have you. I could talk about my fix and flip challenges for about 3 hours here. I don't think we have enough time, but yeah, I've probably flipped 50 houses, fix and flip. Bought, fixed up, sold 50 houses. my career over the last 10 years. And we did very well, Seth and I, with lower end real estate, resale values less than 400,000, which in North Jersey is lower end. And then we started, well, we're great at flipping lower end real estate. We're making money doing this. Why don't we do $1 million homes? So we got $1 million flips, and we use the same contractors from our inner city flips on $1 million homes. And we realized quickly that it's not the same ball game. So we, had some challenges with high end flips and lost some money there, and learned that, your contractors do have a tendency to kind of not know their own limits, and you kind of have to know your contractor's limits for them, so you know what to give them, what they don't, because the contractor is going to guess you to death, like, many people in any business. So you got to be careful there. And but yeah, fix and flips, you're at the mercy of the resale market. So whatever the neighbor's house is selling for is what your house is selling for. The comparable sales, a 3-bed, 2-bath colonial sells for what the 3-bed, 2-bath colonial down the street is selling for. And I don't like that, because I can't control what my real estate's going to be worth so much when I'm done fixing it up. Obviously you can put more money into it and make it nicer, and that improves the value. But that costs money, and by the time you're done renovating it, the market might not be where the market is, especially since we've had a good run for 10 years or so. So I really like commercial real estate more. I can control my real estate values more on commercial real estate, because commercial real estate is appraised based on the income approach appraisal value, which is simply how much net cash flow does the property make.
Right.
So if you buy a building and the net cash flow at the end of the year is $20,000, but now you've owned it for 5 years and the net cash flow at the end of the year is $50,000, it's worth a lot more money. And that's what I like about my commercial buildings over my residential.
So you're going at a pretty good clip. I mean, you're syndicating at least one of these commercial properties on a quarterly basis. Is that right?
We try to. It's quite an ambitious goal. Really, it's more like we bought one in January, we did one in June, and now we're trying to wrap one up, in a year here. So 3 a year is pretty hot for a syndication company. A lot of syndication companies do 1 a year. They're big. So we do small syndications. That's why beginners really like what my story is, because if you go to most syndicators, they're like, yeah, I'm raising $20 million and I'm buying $100 million building and da-da-da-da. And as a beginner, you're like, well, how's that even attainable? And I remember talking to SEC attorneys, and they said, if you don't have, $50,000 to throw away on a PPM, then you shouldn't even be talking about starting a real estate fund. And for years, I thought that was the case. But then I figured out how to start a real estate syndication with about $2,000 in setup costs instead of $10,000 or $20,000 or $30,000, like some other attorneys had told me. And so I also started to raise capital on, just a smaller scale for smaller buildings. We bought a 6-family in January. I put together $165,000 from one passive investor, and that was a good syndication. And that's a very attainable syndication level, where the building's doing very well. It's making good cash flow. Is it better to own 60 units than a 6-unit? Sure, but it doesn't hurt starting with a 6-unit, and you can syndicate, which is a syndication is when you pool together capital from 1 to, it could be up to 100 investors, depending on the type of fund you have. Really, I start funds that limit me to 30 investors, but I have 2 different small funds, and I start a small fund for each acquisition. And it's really, quite affordable, manageable way to run a small syndication, and you can syndicate small buildings. It is possible.
Sure. Do you have a recommendation then? Should people talk to you on how to set up these type of syndications? And because you're right. I mean, I understand syndications can get fairly costly. I mean, if you found a way to do it on a cheaper scale, I mean, it might be more beneficial.
Yeah, absolutely. Well, if you're beginning completely, you certainly could talk to me. I tend to try to connect more with individuals who are looking to put their capital to work in these apartment buildings that we're syndicating. But if you're completely getting started and you have some questions, I don't mind answering them. I'm an open book. But I really focus more on just connecting with people that are saying, wow, I like what you guys are doing. I like the idea of earning double-digit cash on cash returns and owning a piece of the building and getting the tax flow and the cash flow, the tax write-offs, and not having to do anything. And that's primarily who I'm connecting with in my day-to-day activities. But yeah, getting started, don't listen to the guys that say, oh, if you're not putting together, $10 million syndication, then, you can't do a syndication. That's not true. You can file with the SEC for $1,200 if your investors are all in the same state here in New Jersey. So, I remember an attorney telling me if I didn't have $50,000, I shouldn't be thinking about starting a real estate syndicate. He was way off.
Yeah, it sounds that way. So I'm always curious about a little case studies here. So can you give us some examples? Like give me an example of a deal that didn't work out your way, and then we'll go on the positive side. Give me an example of a home run.
Sure. Home run. I mean, well, let's talk about this 6 unit we just bought and that I was talking about. I mean, that's a great example of a building where we started looking at it, and on paper, it made like $400 to $500 a month, and it's a 6-family property. So it's like just scooting by covering its costs, basically. Mm-hmm. And our investor, who's been investing with us for years, basically said, hey guys, I trust you. I've been working this for years. You always underpromise and overdeliver, but are you sure about this one? It's not making a lot of money. And we said, yes, here's the value add potential with it. Here's the 5 or 6 things we're going to do to turn over the property and get it going from $500 a month to $2,000 a month in net positive cash flow. And, and then we went through the motions with him and understood what the plan was. So, when you look at a building on paper, you got to recognize that the value of the value add. Are the rents, in this case, they were 30% below market value for a number of the tenants. The units were just kind of bad. They weren't in bad shape. They were just very outdated, like completely outdated units. But everything worked fine. Everything looked fine. Everything was operational. So it was a matter of negotiating certain cash for keys. So with 3 of the tenants, we worked out a cash for keys where they were paying about $750 a month, and we offered them about $2,000 to move out. And they were happy to move out because the building, a lot of times you buy a mismanaged building, it's been mismanaged for years, and the tenants are kind of ready to leave. And here's an opportunity, some money to help them move, where they get their security deposit back. It's really a nice situation for the tenant who was planning on moving anyway. So 3 of the tenants accepted a cash for keys, and it was about $2,000 payment to move out. And then we put another $6,000 or $7,000 into the unit to spruce it up. And we turned around and rented those units for about $1,300. Or as we went from $750 and $850 to $1,300 for 3 of the units. And then 2 more of the units, we negotiated a partial renovation. We refinished the floors in one, we updated the cabinets in another, and we got about $100 increase per month in those units. And then one of the tenants would only agree to a 5% minimum increase, which was what was allowed for her unit. And that's usually how it pans out. About a third to half the building are going to do what you want them to do, work with you on a cash for keys. About a third of the building is going to kind of meet you in the middle, and you're going to spruce up the unit a bit, and then they're going to improve the rent a bit. And then a third are going to play hardball, and you're going to have to just work with whatever the allowable rent increase is in that area. And when they call you and want this done and that done and this, well, listen, if you don't agree with any rent increases, then I'm not going to focus on giving you, the best unit in the building. Do your appliances work? Does the hot water work? Does the heat work? Great. Then I know what to tell you. If you want brand new kitchens and baths, we're going to have to renegotiate a rental amount, so, and that's a reasonable conversation to have with your tenants. So sure. In that building, we got the rent roll up from $500 to $2,000 a month, and just a phenomenal cash flow. Now the building's worth a lot more than we bought it for. We bought it for $450. It appraised at $540 the day before closing. So again, we got $90,000 off from day one. We really stole the real estate to start, and just overall going to be a very phenomenal investment for our passive investor.
Sure. So when you're going in and talking to these tenants about, basically saying, well, unless we do a rent increase, we can't really do all of this additional updates to your apartment. how do those conversations typically go? I mean, is it usually a hard pill to swallow, or is it something that they kind of accept? And at that point, do
It
you
depends on
even
the
take the opportunity to do a cash for keys or something? Is that like a
Yeah, we always start with the cash. Well, it depends. Like each tenant is different, right? So like let's say we go into a building and a third of the tenants are paying $1,100 a month, and I know I could get about $1,300 for their unit. I'm not going to go through the whole rigmarole, the cash for keys and renovating the unit and moving them out, because I'm just going to say, listen, what's disappointing you about your unit? Now, there are certain things we have to fix, right? You have to have working appliances, heat, hot water, and electric. But if they say, my cabinets are old, I just want those fancy new cabinets I saw in the magazine, and okay, well, fine. Or my floors are a little worn, and I want freshly done floors. Okay, it's a reasonable wear and tear on the building. And we'll try to give them those updated items in exchange for a small increase. But it depends on what the tenant's paying. If they're paying $750 a month, and I know I can get $1,300, then the conversation's different. It's here's the cash for keys offer. Oh, you don't like 1,000? How does 2,000 sound? Okay, how about 3? How about 4? So we have our internal numbers. We know what we'll pay, and usually we'll go up to about 3,000 or 4,000 on a unit. And so every conversation is different, and you do have certain tenants that say, absolutely not. I'm not going to, allow any increase in rent, and usually those are the same tenants that are demanding this and that. So it's they can be difficult tenants, and there are other tenants that will say absolutely not. By the way, the last landlord let me skip a month in rent, and I'm going to start doing that, and those tenants end up in evictions, and that's another way to turn over a unit that's less favorable. I don't want to evict tenants. Tenants don't want to be evicted. But that is part of repositioning apartment buildings, because you do buy buildings that have been mismanaged. That's what we look for. And the landlord did let them skip a month for about 5 years. So they're pretty used to skipping a month. And that's not going to fly with people's capital group.
Right. So since you've been doing this for like 10 years, give me a couple examples of some lessons learned. Like been there, done that, don't want to do it again.
Oh boy. Well, like the first lesson I learned on high-end flips, know your contractor's limitations. Even when they tell you they can do something, you got to know their limitations. And trust but verify, right? I mean, I had a management company that would meet tenants at the property, collect the first month's rent, collect the security deposit, sign a fake lease, pocket the money, and then meet 3 or 4 more people there in the same day, lease the same unit out to those people, run off with all the money. So wow. It was just crazy. Yeah. So that was, a pretty reputable management company. I hired another one that just overpromised and underdelivered, a very nationally known, reputable management company. You know their name. I won't say it, but, and at the end of the day, we developed our own by necessity. We said, boy, if we switch management companies a third time, our tenants are going to lose faith in us. So, it was about 5 years ago. We developed our own management company. By the way, I did sue the management company that was stealing from me, and I won. So that was a whole thing. And those, again, back to syndicators who say, I'm going to put together a bunch of capital from my friends and family and everyone in my network and everyone who trusts me and likes me, and I'm going to put together $1 million and buy a building in Arkansas or something, because the job growth there is phenomenal. I get it. I understand those numbers. I understand the statistics. I understand the pitch, and many people have done well with that. But after hiring a management company, 2, in fact, one that overpromised and underdelivered, another one that just robbed us and lied to us, I am really not of the opinion that it's good to just raise money and hope a management company does their job right. With other people's money. That's a risky model, but that's a very common syndication model, and ours is quite different.
Well, we're closing in on our time here, but I always ask what if there was a question that you wish we would have covered or asked here today.
Sure. Well, I think we went over a good amount of things. We talked about sheriff sale auctions. We talked about repositioning apartment buildings. The way investors can get in touch with us is peoplescapitalgroup.com. We buy a new building, like I said, every 4 to 6 months. So we're very active, and we're really a good fit for investors that are getting started and say, man, I only have $30,000. I can't really go buy a building or flip a house. It's too tight. I'm inexperienced. So we do something called Learn and Earn, where we give our documents away. We give our spreadsheets, our offering memorandums, our offering contracts, and all the documents we use to analyze and offer buildings. So if you're new and you're getting started in real estate and you don't have a bunch of money to invest, but you do have around $30,000 to $50,000 to put to work, then we do something called the Learn and Earn program, where it doesn't cost our investors anything. If they're investing in a building with us, we're going to give them all these documents and spreadsheets and editable forms so they can analyze buildings and make offers on buildings. And it's something we used to sell for like $2,000, but we just give it to our investors that are curious and hungry for that. And that's called Learn and Earn. So I know you're saying your listeners are a lot of beginners, which is great. We all started somewhere. And beginners tend to say, well, I don't really have a whole ton of capital to get started or experience. So with us, they can get started with a smaller amount of capital. All the documents in the Learn and Earn is free, and they can do whatever they want with them. But then they're investing in a building. And next time they go to a real estate networking event, they can say, hey, I own part of a 20-unit building, and that's a great line to say at your next real estate networking event. You're going to get a lot more positive responses with that. So, check out peoplescapitalgroup.com, and that's where you can apply to learn more and see if you qualify for an upcoming investment. And that's peoplescapitalgroup.com.
Sure. Is there any other way they could get a hold of you, follow you on like Facebook, Twitter? I know you have a podcast that you're thinking about starting.
Yeah,
maybe
we're
I
starting
outed
a podcast. Yeah, no, that's fine. We're starting a podcast. I'm currently interviewing current and past investors for the podcast, and that's going to be launching pretty soon. I have a YouTube channel called People's Capital Group, and we have events here at our office in Berkeley Heights, New Jersey. So if you're local to New Jersey, you live in New Jersey, New York, or PA, you can come to one of our events here on the second Tuesday of the month. We have webinars as well on our real estate network. So I have New Jersey Real Estate Network on meetup.com. That's our meetup group, and there's over 3,000 members in it. So we have webinars on there like 3 times a month, live webinars. So that's a great way for people to connect with us and kind of learn from us and see our business and work. But also our office number here is 908-464-0400.
Well, I can't thank you enough again, Aaron, for joining us this week. This is very insightful, and I'm sure people will be reaching out and hope we can do this again sometime.
Absolutely, Jack. I'm open book here. If you have any questions, let me know. And looking forward to when the podcast comes out.
Yeah, we'll talk to you soon. We've put a lot of effort into providing useful content, and if you found value in the show and have any interest in supporting us with a small donation, head over to patreon.com/housedudes.
And if you have any thoughts or questions, shoot us an email at info@housedudes.com. You can also find us on Facebook, Instagram, and Twitter @housedudes. And if you like what you're hearing, head over to iTunes, subscribe, rate, and review the podcast. It really helps other investors out there find the show. And remember, massive positive impact requires massive positive action. We'll see you next time. This episode was brought to you by housedudes.com. Do you have time to actively manage flipping and rentals yourself? If so, go for it. If you live in a market that won't cash flow or don't have the time to do all the work, are you just out of luck? If there was a way to participate more passively, would that appeal to you? I'm sure you have questions about how the process works and what to do next. If that's the case, fill out the form on housedudes.com/investors, and we'll reach out to see if you are a good fit for our business. This is first come, first serve, and we will have to stop taking applications when our goals are met. See you at housedudes.com/investors.
I don't like to tell a man what to do with his money, but if you ain't investing in property, then you're dumber than a dummy.
I'm not dumb. I'm smart.
Well, buy property. That's my advice.